Hello, this is Anthony Parent from Parent LLP, IRSMedic. And one of the common themes I've been mentioning over the years is how complicated the U.S. tax code is. And in fact, the IRS has a difficulty administering its own laws. There's no one in the world that knows everything about U.S. taxes, including anyone at the IRS. And it's very difficult for them to keep track of what's going on in many cases. And here is another example that we've ran into and encountered where the IRS isn't aware of what taxpayers have filed. And let me set up this scenario for you a little bit here. Years ago, it was very common that we would file an offshore voluntary disclosure for people that were haven't reported their offshore accounts and incomes. Basically, everybody sort of fit into the Offshore Voluntary Disclosure Program, the OVDP as it was. Later, the rules were relaxed in 2014 to sort of make them a little bit more fair for everybody. One of the OVDP forms out there was something called a preclearance. And you filed this preclearance because, well, look, you're filing an Offshore Voluntary Disclosure Program for a reason. And one of those reasons is there could be a criminal investigation going on. So we would file preclearances in most cases, and even in cases where we're pretty sure the client would file a streamlined submission. And the reason why is because just because someone filing a streamlined submission is somebody, in my opinion, and the opinion of our staff, that somebody who didn't have a real criminal intent, they shouldn't have criminal exposure. But just because you didn't do anything wrong doesn't mean the IRS investigation unit is going to look at that way. So we've submitted hundreds of streamlined disclosures over the years, and two of our pre-clearances that we sent out came back that the client was under investigation. And we talked in both cases to the prosecutor, to the U.S. Attorney who was assigned the case. In both cases, because we got there quickly, they said, okay, as long as you're going to do your streamlined disclosure, that's fine, and we're not going to take any additional action. So filing these pre-clearance forms for these two clients was incredibly valuable because let me tell you something. Once that investigation starts, you might be innocent. You might very well be innocent, but they also like to indict your spouse too, to put additional pressure on you to plead to guilty, and also finding an attorney who can represent you, assuming you have the emotional fortitude to stand up to the U.S. government, is going to cost you hundreds of thousands of dollars, and to say 2 years of your life wasted, tied up in court. And that's why the plea, if you look at the plea, it's about 92% of people charged with federal tax fines plead guilty, and this is one of the reasons. So that was two cases where I think we did a great job because those are two people who didn't have to go through that nightmare. We got their streamlined disclosures in. Now, for all the rest of our clients, this is where it gets interesting. So here is a letter, letter 5935. This is a letter that the IRS LB&I, Large Business International, has sent out to a few of our clients who we've made streamlined disclosures for. The submissions were made. And it says, Dear taxpayer, our records show that you made a pre-clearance request to the IRS criminal investigation for an Offshore Voluntary Disclosure Program initiative, OVDP, or submitted a voluntary disclosure to the IRS criminal investigation under the terms of OVDP. After contacting IRS criminal investigation, you withdrew your pre-clearance. Well, that's not really true. We didn't withdraw it. We just didn't go with a full OVDP. So I don't know why they're kind of saying that. No, we filed a preclearance. We didn't withdraw it. Now it says our records indicate that you haven't taken necessary actions to remedy your noncompliance with the U.S. reporting related to your foreign income, foreign entities, or foreign financial accounts. Really? Your records didn't indicate that we hadn't taken the action necessary. So this is, again, here the IRS has no idea what's in its own records. For these clients, we have gone and filed a streamlined process. It's been accepted by the IRS. The account transcripts reflect it. So here, LB&I does not know that our clients have properly submitted a streamlined program that has been accepted. So, I mean, you got to be really confused. I mean, this is always the thing. When you get these letters from the IRS, you got to be really confused. And so the first step, when you do receive a letter from the IRS, is to say, assume they don't know the first thing about you. Assume that they don't know what you actually did. Then you might be on the right hook, and then maybe you could figure out sort of the next step to take. Now, they give option number 2, because option 1 doesn't apply to any of our clients because we already made a streamlined compliance procedure, so we can't do it again, right? So option 1 doesn't apply. They give us option 2. If you're not eligible or choose option 1, submit all required tax returns, information returns, and related filings to address the enclosed form 15023 offshore compliance status response. Now if this happens to be one of you, I would be really wanting not to do that yourself. I think this is something that deserves a call to professional because I see some risk in doing option number 2. Again, option number 1 doesn't apply for our clients who've already made a streamlined disclosure. Option 1 applies when you can still try to get one if you haven't done it already. But option 2 really concerns me. I'd be very concerned that doing that because you have no protections of penalties. And really some of the penalties that you might not be thinking of, you might be thinking about your FBAR penalty, but there might be a lot of other penalties you're not thinking about that the IRS is now really aggressive on assessing. Those are your Form 8938 penalties. That's the result of FATCA. You have your Form 5471. So if you have some interest in, or if you have a controlling interest in a foreign corporation or the beginning or end of that foreign corporation, you're over a 10% stockholder, you might have penalties there. If you have a foreign retirement plan, that could require a Form 3520A or Form 3520. So just in 1 year, adding those up, simple things up, you can get up to $50,000 in penalty per year. So I would say option 2, give us a call if you want to do that. If you're sort of didn't do anything yet, not sure what to do, you give us a call at 203-269-6699, and we can kind of walk you through it. Now, the letter goes on. And it says, if you believe that you're fully compliant with all U.S. reporting obligations related to your foreign income, foreign entities, foreign financial accounts, and provide a narrative statement of facts explaining your position. You must provide a complete history of previous unreported income, foreign entities, and foreign financial accounts, and explain the actions you took to become compliant with U.S. reporting requirements. So this is what we're doing for our clients who we've submitted the Streamlined Disclosure for. We're just saying, yes, guys, very nicely, we're saying, check your records. Everything is A-OK there. And then they're saying, the letter explains to say, review these 3 options, and then check out Form 15023, Offshore Compliance Status Response. And that's where we get this here form about which one you want to do. Again, option 1, you could just submit a streamlined submission there with it. Kind of want to make sure that's done right, though. Then option 2 is really the option I would not fill out without some expert advice on that, because there's probably something better you want to do. Option 3 is what we're doing for our clients that we've made our submissions for years ago, perhaps. And then option 4, the 60-day extension request. Not a bad idea if you need to get a second opinion to check that off, because I know the IRS sends these letters and usually not a lot of time to respond, especially if you're overseas, by the way. Sometimes the mail is a little tricky getting there for you. So this is again, proof that, the IRS is such a large entity. It's just not administratable. It's just not. It's beyond it. And, I don't mean to disparage anybody working in the IRS. It's a system. It's a system with multiple competing databases with that don't give all the information to the people who are trying to make decisions. So if you do receive this letter and you have made a disclosure, don't freak out. It's something that can be handled. If you didn't make a disclosure, don't freak out. It's something that could be handled. This is Anthony Parent of Parent LLP. I thank you for watching. And if you have some sort of offshore issue that you are concerned with, don't be afraid to call us. And there's a lot of changes going on this year in 2018. There's a lot of new laws being thrown up there. I'm going to have some content going on there. There's one proposal out there that makes FATCA, the Foreign Account Tax Compliance Act, look moderate and reasonable. And I'll be talking about that pretty soon. So be sure to subscribe now so you can keep updated to all the new tax updates that really might affect your life. Thanks for watching.